Today, we are diving deep into the Indian economy. It's a story of some absolutely staggering growth that's making headlines all over the world. But you have to ask, is this just hype, or is something really truly shifting on the ground? We're going to look at the big numbers, the street-level battles, and most importantly, where the smart money is actually flowing. All right, let's get into it.
So this is it. This is the big question on every single investor's mind right now. You look around, global markets are, well, a little shaky. But India seems to be this incredible outlier. So is this momentum actually sustainable, or are we just looking at a temporary surge? To figure that out, let's start with the hard data.
And while the data really does speak for itself, you're looking at a projected GDP growth of 7.4% for the fiscal year 2026. That is a massive number. And it's not just strong on its own, it's actually an upgrade from earlier, more cautious forecasts. So what on earth is behind a figure this big?
Okay, so that 7.4%, that's the headline. But the real story, it's always in the details. What we're seeing is something that analysts are calling economic swagger. It's this newfound confidence that's holding firm even while other parts of the world are facing a slowdown. And it's this confidence that's fueling all the action we're about to see.
This growth isn't just coming from one single place. It's being supercharged by this powerful combo of really strong investment and a completely revitalized manufacturing sector. We're talking about actual, real-world production getting a boost, backed by some pretty significant policy reforms that are holding up even against global economic headwinds. And here's a number just to put all of that growth into perspective. The Indian economy is on track to cross the $4 trillion mark this fiscal year. I mean, that's a huge milestone. It just speaks to the sheer scale of the expansion we're witnessing. All right, let's break this down a bit. Where's all this growth really coming from? Well, manufacturing is absolutely leading the charge with a massive 9.1% growth rate. But look closer. Services are growing at a super healthy 7.2%. And this one's important. Gross fixed capital formation. That's basically investment in the hard stuff, like factories, machinery, and infrastructure that will drive future growth, is up a very, very strong 7.8%. So this isn't just a consumer spending spree. This is an economy that's actively building its own future. Okay, so these big macro numbers are fantastic. They really are. But what does it actually look like in the real world? Where are the deals being made? Where's the competition really heating up? Let's zoom in and take a look. First up, let's talk about the renewable energy sector. Honestly, calling it a sector almost doesn't do it justice. It's more like a modern-day gold rush, with billions and billions of dollars in play. And there's this fascinating tale of two very different deals that tells us everything we need to know about what's going on. So on one side, you've got this global energy giant, Shell, and they're thinking about selling off their major Indian renewable asset. Then on the other side, you have a domestic player, Inox Clean Energy, raising a staggering amount of new cash. Now, at first glance, that might seem totally contradictory, right? But what it actually reveals is a market that is just in constant, dynamic motion.
Let's break it down a little further. Shell is reviewing its options for an already established asset, Spring Energy. At the very same time, Inox Clean Energy just secured over $330 million from huge global investors like CalPERS to fund brand new growth. And that tells the real story here. While some early investors are cashing out on mature projects, a whole fresh wave of capital is pouring in to build the next generation of green energy.
And this kind of disruption isn't just happening in big energy deals, it's happening right there on the streets. Let's shift gears and look at the absolutely fierce battle for dominance in India's massive electric scooter market. Now, this is a market that has seen absolutely explosive growth, and for years there was one very clear frontrunner. Well, guess what? The script has just been completely flipped. There is a new king of the e-scooter hill.
I mean, just look at this shakeup. The legacy automaker TVS Motor saw its e-scooter sales jump by 35% last year. Meanwhile, the previous market leader, Ola Electric, saw its sales completely collapse, down 51%. It's a stunning reversal of fortunes, and it's a really powerful reminder that in a high-growth market like this, no lead is ever safe. So with all of this action going on, you've got a booming green energy sector, you've got dramatic shakeups in EVs. How are the big global investors supposed to navigate such a complex market? Well, let's take a peek at where the so-called smart money is actually moving.
This table is really fascinating. It shows a really clear rotation by what we call foreign portfolio investors, or FPIs, at the end of December. They were selling out of consumer-facing sectors, think financial services and FMCG, And they were moving that money into global-facing sectors, like IT, and industrial ones, like metals. Now, this isn't panic selling, it's a strategic pivot. They're likely betting on a global tech recovery and continued infrastructure spending.
Now let's dig a little deeper into that financial services sector they were selling, because on paper, everything looks great for the banks. I mean, they're seeing their profits set to get a boost from lower deposit rates, they have supportive central bank policies, and there's still really strong demand for loans. By all accounts, everything looks pretty positive. And yet, FPIs sold over 4,000 crore rupees worth of these very stocks. So why? Well, the consensus is pretty simple: profit booking. The sector had an amazing run, and these investors decided it was just time to take some of those profits off the table. It's a perfect example of how good news for a company doesn't always mean it's a buy for an investor.
Okay, so now let's look ahead. If all these sophisticated investors are taking profits from existing stocks, where is all that capital going to go next? The answer seems to lie in a massive, massive wave of companies that are getting ready to go public.
Get ready for this number. In 2026, companies are expected to raise a staggering 6 lakh crore. That's 6 trillion rupees from the equity markets. I mean, that is a gigantic wave of new investment opportunities, and it's heading right for us.
And the lineup of companies is really diverse. We're seeing new age tech and consumer companies, but there's a twist this time. Investors are now demanding a clear, believable path to profitability. We're also seeing a lot of interest in yield-generating assets like real estate and infrastructure trusts. And, this is crucial, there's a powerful force of domestic institutional investors ready and waiting to absorb all this new supply.
And listen, we are not just talking about small companies here. According to V. Jayasankar of Kotak Mahindra Capital, a huge portion of this, around 35%, is going to come from billion-dollar-plus mega IPOs. The scale of these new offerings is just going to be immense.
Which, of course, brings us to the final critical question. With this record-breaking growth meeting a literal tsunami of new capital, is India building a launchpad for decades of future prosperity, or are we just watching the inflation of a massive speculative bubble? That right there is the trillion-dollar question that's going to define the next chapter of this incredible